Federal Reserve is once again expected to hold interest rates steady when the board meets later today. And despite President Trump's loud and frequent demands for lower rates and his attacks on the chairman, Jerome Powell, whom he has threatened to fire, new data released Tuesday shows Americans are growing more hopeful about the economy. Consumer confidence rose 2 points this month, staying stable since May after April's big plunge, but remaining below last year's levels. Global economic data is showing signs of similar optimism. The International Monetary Fund has bumped its global forecast up 3%. It was at 2.8% in April. That's after the U.S. GDP was raised by 1.9%. And China's economy performed better than expected. But the IMF warns there are still risks, especially from the ongoing trade uncertainty. Earlier this week, the Trump administration announced the contours of a trade agreement with the European Union, calling it the biggest deal ever made. But after 3 rounds of talks, U.S. negotiators have failed to reach any such agreement with China. It's not clear if the country's 90-day pause on tariffs will be extended. Tariffs are set to skyrocket on August 12th without a deal or an extension. To discuss all of this, we're joined now by CNN global economic analyst Rana Foroohar. She's also a global business columnist and associate editor at the Financial Times. Good to see you, Rana.
Great to see you.
So no deal on tariffs for the U.S. and China after another 2 days of negotiations. Are we likely to see yet another extension of the deadline, or is there potentially real economic pain ahead for both sides?
You know, this week is going to be a big tell. We heard in the first day of negotiations, the president saying, oh, things aren't going so well. Then we hear they are going well. He ended with an upbeat note. We don't have news yet, but it's going to be very interesting because in the U.S., this is a big week, not just because of tariffs, but we've got GDP figures coming in. We've got a Fed ruling, whether rates are going to remain as they are, whether they're going to hike, whether they're going to lower. I think they're probably going to stay as they are. Tariffs is going to be the third piece, really, along with jobs, of the U.S. economic picture. And I think that whatever happens this week is going to set the tone for the next few weeks, if not months. The China deal is very, very important. EU was important, but at the end of the day, the entire Trump trade paradigm and the shifts that have happened are because of China. So everyone's waiting to see what's going to happen.
Yeah, I want to get more from you about the overall economic outlook. But I also want to ask you about what potentially Beijing can learn from how trade negotiations have been handled between the U.S. and the UK, the EU, and Japan. What lessons can be applied to potentially break the ongoing deadlock?
Well, it's interesting because the Chinese were already sounding off on the EU deal earlier and saying, the EU should have hung tight. This was not a good deal for the EU, and I think a lot of people would agree with that. Trump actually lowered the proposed tariffs by about 10%, but that still leaves the EU with a 15% tariff. That's about 3 times as high as it was before. They're not getting a whole lot in return. They really need the U.S. market for their pharmaceuticals, for their automobiles, their white goods. And so this does come across as making the EU look a bit weak. And so I don't think the Chinese are taking any lesson aside from don't come out with this kind of unilateral deal. The UK is a little bit different. It was the first deal cut. The US and the UK have the special relationship still. But the UK is a small country. This is not as strategically important to the US as what happens with China. I think the Chinese are going to play hardball. That's the line that they've stuck with since the beginning of the trade wars and since Liberation Day, and I don't expect them to veer from it now.
Yeah. Well, overall, looking at the big picture, U.S. consumer confidence rose less than it's expected in July. Job availability is now seen at its weakest in over 4 years. So the labor market seems to be cooling, but overall sentiment hasn't turned negative. How do you interpret that disconnect?
The jobs numbers have been really mystifying for the last few months. There's been a lot of predictions that they would weaken. They've come in stronger than expected many times. There's a prediction again this Friday that they're going to weaken from the month before. Whether that's the case, who knows? But again, if you see a real directional shift from what's being predicted, if they really come in hot, that's going to put pressure on the Fed. That's going to, maybe kind of create more tension in the Powell-Trump relationship. If you see them coming in incredibly weak, then that's going to make people worried that, well, maybe we are in for more pain. Maybe the U.S. isn't as resilient as it looks despite all the shocks it's weathered in the last few months. And, maybe this is time to come back down to earth. Whatever happens, these next 3 days are going to be a big deal.
And speaking of Wednesday, President Trump has renewed calls for a rate cut, calling it a very simple request. What do you think is going to happen? And Chairman Powell certainly doesn't seem the type of person to cave to any sort of political pressure, right?
No, he's not. I think he's done a really admirable job of dealing with the situation that he's in, not just politically, but economically. I mean, this is an incredibly difficult moment to be making monetary policy. It's really difficult to tell which direction the winds are blowing. Companies are actually more bullish than you might imagine, given everything that's going on. But I've spoken to labor representatives that say, we think a recession may be coming in the fall, maybe in the winter, and we are worried that the pain of tariffs is just beginning. So it is just very, very difficult to tell what's happening on the ground. And that's because we're coming out of a cycle, out of a period that has been so unusual, from the pandemic to the big fiscal stimulus of the Biden administration to the war in Ukraine. I mean, conflict in many places, tariff and trade issues. It's just a very unusual situation. I don't think I've ever seen this many economic vectors in play in the 30-plus years that I've been doing my job.
Wow. Well, we will discuss all of this, no doubt, again very soon. Rana Foroohar, always good to get your analysis. Thank you.
Thank you.